60% APR risk-free on USD. Welcome to another video. My name is Kügi and I try to provide you with data and insights so that you can make smart decisions for yourself. Today, I'm not talking about DeFi chain, but a different topic from the market. It's a trading strategy, delta neutral, as I like it. And it's been a strategy that I used some time ago when the trade was open. And I shared that on Twitter, and a lot of people ask how this works and what it is and all that. So I thought next time when the opportunity opens again, I make a video about it, so to explain what's going on there. First of all, this is not financial advice, just for educational purposes, so that you know what I'm talking about when I talk about this delta neutral strategy. When I say risk-free, yes, the title is a bit of a clickbait. Sorry for that, but yeah, it was fun. When I say risk-free, it's basically the trade itself is risk-free. So you are delta neutral in the market. You always have platform risks, counterparty risks. You always have the topic of the fees and everything. So you have to consider how much fees you pay there, because it doesn't help if you get 60% APR on the year, because APR means extrapolated on a year for a day, and then you pay for the entry and exit of the trade so much fee that you actually pay more fee than your reward. So such a trade usually needs to be executed for a longer time. Don't open close it within an hour or something, right? So that's one topic. But the strategy itself is risk-free or delta neutral. So let's talk about it. What are you doing? The thing is on USD, not on Bitcoin. We just use the Bitcoin trading tools as a tool, because there you have the strategy, but it's actually a dollar strategy. Second, I use Bybit because I like Bybit. I do basically all of those derivative stuff on Bybit. You can use my ref link if you want to support me. If not, then not. You can also do this strategy basically on any platform that has, or any exchange that has a spot Bitcoin trading and a perpetual future and an inverse perpetual future, where you get funding rates. Anywhere there you can do that. And what's the idea? On the left you have the spot market, and on the right I have the inverse perpetual from Bitcoin in Bitcoin USD. And as you see now, the funding rate, and that's the important stuff here, the funding rate is currently 0.055. This funding rate is paid out every 8 hours, so 3 times a day, a bit over 1,000 times a year. So up extrapolated to the year, this is this number times 1,059 or something. So it's roughly 60%. If you have that number, it's roughly 60%. In default, the funding rate is 0.01, so roughly 10% a year. So this trade is actually always open, but 10% is not that much when you consider the fees and everything and the opportunity costs and everything. But just so you know, that's basically a bit of the calculation how to get to the 60%. How do we do it, or what's actually happening? What you do is you take $100 and you buy Bitcoin for $100 on the spot market. And as you see right now, we have here 69,985, 69,992. So the perpetual, the inverse perpetual, is currently trading in a premium. That's why the funding rate is positive, or this big amount, because funding rate is a mechanism from the perpetual future to say the funding rate is what the long positions pay the short positions. So a high funding rate means longs are disincentivized because they need to pay for their positions, and shorts are incentivized because they get paid for opening the short. And therefore the idea is that more people close their longs, open shorts, and get the perpetual price back to the real spot price. So as long as there is a lot of hype in the market, a lot of bullishness in the market, people buy the perpetual to gain more exposure. As long as the funding rate positive and you basically can farm this funding rate. And exactly what you do is you buy the spot for 100 USD, you get some Bitcoin out. You don't care how much actually. The important thing is that this Bitcoin is now worth, that you buy here is now worth 100 USD, and you make a short on the perpetual, on the inverse perpetual for 100 USD value. Since it's in a premium, you get a better entry for the short than your entry in the spot. So that's already a bit of a bonus for you. And then you have since you can have the unified trading, the Bitcoin that you buy here is the collateral for the trade here. So you can't get liquidated because you have the full short as a collateral. And now you are delta neutral in the market. If Bitcoin rises, your bought Bitcoin, your collateral rises in value, and your short position makes the same amount in losses, in open losses. And if Bitcoin falls, your Bitcoin that you bought falls in price, but your short makes the same amount that you lost in the Bitcoin value as a profit in the position. So whatever you do, as soon as you then close it at the same price, you are out with your 100 dollar, and you just paid a bit of the transaction fees. So you have 4 trades, opening here, closing here. So 4 trades for the fees. And in between, you made the funding rate and you farmed the funding rate. And if you even are able to catch a premium, so you buy lower than you sell here, and you close the position once the funding rates gets below the neutral, which means that this is in a discount, then you can even close it in the other side and get a bit of a profit from that too, but that's not the main point. So I hope this helped a bit already in the understanding what's going on. So now let's do that and just execute it and see what's happening. We see right now we have for 1908. So if you, just as a one word, there's a bit of a volatility right now. Usually if you want to get a better execution or anything, you can say you open here, for example, with a limit, that you put a limit buy in and then stay here over the button with the mouse, and as soon as it's executed, you execute it here. But I don't want to just sit here and wait now for the limit to get executed. So I will just do it market. 900, 913, that's fine. So let's buy here and sell here. And it executed just a small, just 99.95, which is fine. As you see, bought on the spot, direction buy, field price 69,897, and 413 Bitcoin I got. I paid 0.1%, and that's the thing. And on the other side, I now have a short position. The leverage is actually irrelevant because I anyway have no liquidation price, because I have the full amount here, because field quantity 0.014, so I got 0.0013 Bitcoin, and the value here is 0.014, which is my necessary margin. I mean, I have far less margin because it's a leverage trade, but it doesn't matter. And we have this this realized profit and loss is the paid fee, and we already are up unrealized, but as I said, this unrealized profit that we have here is actually the loss that we had here. You can also check the entry price, and as you see, we bought 69,987. So we bought it $6 below our short entry. So this is already a small plus. Yes, and with that, I think that's all there is to say about that. I will leave this trade open. And as soon as the premium goes away, the funding rate goes away, I will then make a video where I close the trade. So with that, I hope that helped. If you want to support me, if you want to try it out, use the ref link. If not, not if you want to do it somewhere else. Do it. If you have questions, leave a comment. If you want more videos about how to use platforms, how to do trading strategies like that, leave a comment. I will see what I can do. And with that, see you in the next video.